Welcome, everybody. I'm Dominic Venuto, Chief Operating Officer at Progress Partners. I want to thank you all for joining us today as we recap and discuss the retail media landscape and how it's fast transforming the digital advertising space in profound ways. What you're about to hear really started off as a Progress Ventures research project. We were sharing it internally and with select prospects, and we were getting huge demand for the content, and given its depth and breadth and the number of insights that were in there. So given that fact, we decided to share the data and insights here publicly with you for the first time. Before I introduce our speakers, I can move to the next slide. Thank you. A little bit about Progress Partners. We have two parts to our business. We have an M&A banking business as well as a venture capital business. On the merger and acquisition side, 2022 has been a record year for us. We've successfully closed over $1 billion in transaction value over 12 deals. Our most recent and notable transactions included the sale of Apollo-owned Gamut and Cox Reps to One Equity Partners. We also sold Media Radar to Thompson Street, and most recently Retarget to Epsilon, part of the Publicis Group in LATAM. We're proud to say that we are now 35 people with offices in Boston, New York, and Washington, which we're, with the Washington being a recent addition and one we're proud of. We also operate a ventures business as Progress Ventures. We're currently in Venture Fund 4, a $35 million fund with a focus on B2B technology companies operating in media marketing and advertising. We're 12 companies in to a 15 company investment with notable portfolio companies being Iris TV, ID5, Narrative, companies in the data and identity space, Tenavos, a digital asset management company, and Teikametrics, an online retail management platform. With that, I'd like to introduce our presenters today. So we're lucky to have our very own Sam Thompson. Sam's been with the firm for over 15 years and a founding partner of Progress Ventures. As such, he sits across our banking and venture capital side, and he's well-versed in the retail sector. I'd also like to introduce Brett Chatfield. He's an associate with the firm focused on the ventures arm of the business. He's been with the firm for over 2 years and works closely with our existing portfolio companies, while also scouting for net new investment assets. He's been deeply immersed in the retail media sector and the main author of this work, both great Sherpas for our journey today. Before we get to the meat of the presentation, just one or two housekeeping items. So we will save time for questions at the end, but with that said, feel free to ask questions as we go along. You can do that in one of two ways. You can either use the chat and ask and type a question there, and we'll feed those to our presenters. Or alternatively, you can raise your hand and we'll unmute you and you can ask your question directly. Otherwise, you can save your questions for the end of the presentation. And I'm sure everybody's well versed in Zoom, but in case you need a refresh, those activation, chat and raising your hand can be seen in the Zoom control panel. Okay, with that out of the way, Sam, Brett, I'll hand it over to you. Thank you.
Great. Thanks to have you guys here. Thanks all for joining. Thank you for the introduction, Dominic. Good afternoon. Great to be here and talking a little bit more about retail media, an area that we've been really focused on and quite excited about for a better part of the last 6 years. And as you see, as we move into the slides here, this is something that has been building, not overnight, but steadily, and then really seeing great acceleration in the last 5 years. So what are we talking about from a scale standpoint? BCG puts it as $1 billion media opportunity for retailers. There's a lot here to cover and really where all this is coming from. But we're talking about net new dollars coming into the market, dollars coming in from trade and co-op budgets, dollars coming in from direct marketing. It's not all digital advertising or any other form of traditional advertising coming over to the retail media sector. It's a combination of many different sources. But just to get the elephant out of the room, you have a really key player in it with Amazon. I think we all probably suspected that, but the numbers really show it as well. And we'll get into that a little bit further. Just looking at how big the retail media ad spend is in 21 at 31 billion. You've got Amazon making up 24 billion of that 31. So they are a significant leader. And a lot of that has to also do with their leading position as a host to more sellers than any other platform in the market to date. We do see that changing, but we'll certainly expect to see a lot of activity and a lot of the growth and investment into areas that support the Amazon ecosystem. So quick agenda, running through and giving you our perspective on what is retail media, getting a little bit deeper into the market, and then talking a little bit about growth drivers and future opportunities and what gets us excited both on the venture side as well as on the banking side.
Great. So to kick us off, we'll just walk through defining what is the retail media landscape. Retail media really sits within commerce media, which is the broader link of content and commerce. So it's really gauged at connecting audience impressions with transactions. This kind of spun out of the traditional affiliate marketing model of a connection between an advertiser and publisher who would push a promotion to a customer with hopes that they would make a purchase. Now everything is focused around really closing the transaction loop between the impressions you're getting in your ads and the actual transactions themselves. So we see this coming through in a few ways. One of the major ways is through elements of what we define as social commerce. So you're seeing this through shoppable ads on mobile websites, on a lot of social networking websites, live commerce. You're seeing these capabilities in places like TikTok, Amazon Live, even Facebook Live as well. You're seeing it in the metaverse, using even digital currencies to make different types of transactions. We've seen a lot in digital in-store media. So you're seeing new digital signage and even digital audio pop up inside of retail locations. These are really gauged around connecting that full customer journey, not only on the website, but even into the physical in-store. But really the bulk of the dollars comes from the digital retail media networks. These are things that we see on places like Amazon and your other retailers. And it's where a lot of the growth is driving what we define as digital retail media. So digital retail media is the subset, but the large subset of the broader commerce media landscape. And it's defined as the ads that are served across search, display, and the product pages that you see on online retailers. It's incredibly popular because it's low funnel. The chances are if you're shopping on one of these online retailers, you're likely to make a purchase. It's very close to the actual point of sale. So it's very low funnel inventory. It's privacy protected. So as third-party data and cookies get scrutiny from privacy regulations, this is becoming a more and more important of the broader importance of data into the advertising ecosystem. It's very non-intrusive. So I think a lot of folks like us who are familiar with marketing and advertising do know how to spot these types of ads, but for the average shopper, it's very native to the experience. And then lastly, it provides a great ROI for advertisers. It's very measurable. What it looks like on the retailer site, it's very akin to a lot of the traditional search type advertisements. So you're seeing things like search results, banner ads, and also a lot of the couponing and featured and promoted items that you're seeing within these retailers are actually part of the ad dollars that are flowing through retail media.
Picking up a little bit on Brett's prior comments, looking at the value chain here, the retail media ecosystem doesn't just bring consumer insights or the data, as he mentioned, back to brands in ways that any type of shopper marketing struggled or had a less direct route to the brand from the retailers. It also is bringing a lot more benefit to the retailers and being able to cover margin, right? So where you're looking at retailers that are discounting, Walmart's moving into this space, Target has been in this space, and Amazon itself, and we'll get into this a little bit later, you're allowing a little bit more flexibility in margin. So you have the retailer benefiting there, you have the customer benefiting by being able to get lower cost items, and also getting relevant advertising back in front of them as they're navigating the retailer's website.
So what does this look like? So this is just an example of what happened when I looked for toothpaste on Amazon. What you get is a litter of ads. So the chances are, if I'm looking for toothpaste on Amazon, I'm about to make a purchase. So it makes sense for these brands to be bidding for these advertisements. And it's really the bulk of what you're going to see in any type of landing page. You obviously get the search results, but also there's kind of benefits of upper funnel advertising on a lot of these sites, going with the banner ads and what you're seeing on home pages on a lot of these retailers. And so Amazon, again, was the first to do it, but a lot of other retailers have really copied their playbook. If you look at Walmart, it's really cloned a lot of what Amazon has done in both look and feel. You're seeing a lot of the same types of sponsored posts, not only through banners, but through search results as well. Amazon or Walmart began to do this, 4 or 5 years ago. Even recently, you're getting other retailers like Best Buy get into the space. Again, traditional look and feel, but also the products that are outside of what they define as sponsored. So what a regular shopper might not really notice as an advertisement is actually still advertising. So they're really aiming to monetize a lot of their digital shelving. And what this has led to is ads becoming everywhere. So it's now grown into everywhere from your groceries to all different types of retailers like Walmart, Target, others. It's hitting your small sellers. So even those as small as Etsy, it's hitting a lot of the things you're looking for in traveling. It's hitting what you're eating on Uber Eats, and even to a lot of the medicine that you're getting on Walgreens and CVS. So really everything has evolved into some type of media network.
In that same theme and the idea of a media network, we're seeing the offsite being a big area of growth beyond just the on-site ads. In fact, the off-site advertising, be that on Twitter or otherwise, driving traffic back onto the retailer to then bring them further down the funnel. Key point also, if you look at the bottom of the page here, under the surveyed companies, according to McKinsey, is you've got a huge split, going back to the comment I made earlier around share of wallet and where these budgets are coming from. Direct and in-store marketing now down to 25%, where you then have 45% to offsite and 30% of this on-site ads. So offsite is a huge growth area and one we expect to see building up with players beyond Amazon as the market continues to grow, and each of these different platforms are looking to grab market share. So getting into a little bit of the history, we previewed this on one of the earlier slides, but really looking at the growth of Amazon's ad revenues over the years, we definitely have seen a real pickup, and the pandemic has certainly helped. But key point here as well is moving from what was the real duopoly of Facebook and Google to Amazon as a more significant player or a triopoly coming forward here. And they're Amazon forecasting 40 billion by 23. That would put them in line with some of the other giants out there. So we see this continuing a trend and expect others to sort of jump on. I'm not sure we're going to see any reach quite the scale of Amazon, given its reach. And we'll talk about this a little bit further, but let's keep on going as we move in from the 2012. Yes. So we have other entrants. We've got Walmart, as mentioned, Target. Kroger just announced recently in its proposed merger with Albertsons. There are a lot of different angles on this transaction, but you can see where all of the major grocers in the market are really focused on their ability to compete with the likes of Amazon. And that's where, while it may not be the best for the shopper in shutting down locations, in consolidation of the reach in the market, a Kroger acquisition of Albertsons would allow the retailer to really build a stronger position with brands and advertisers vis-a-vis Amazon and some of the other players in the market. It's a real big concern, and one that we see will continue to drive consolidation in the market at the highest levels, and also see innovation be funded for a lot of the technologies that are making these networks possible. So, where are we going? As Brett mentioned earlier, This is something that is being picked up not just by e-commerce players and marketplaces or the merchandise and shopping retailers, but you get specialty and certainly some of the intermediaries out there that are all starting to put the sponsored positions in there. As noted before, it really allows the retailers to have more flexibility in their margin and allow more discounting for the consumer. So in a way, there is a benefit being pushed back to the customer and consumer.
So next, we'll take a quick look at how retail media has grown into one of the largest digital advertising channels. So if you look at it now, retail media has become the third largest channel in digital advertising. So right after search and social. This has been fueled by the fast growth in a few different categories. One of those is e-commerce. So the pandemic was a big accelerant for this, but it's only continued to grow since then. In addition to that, they're getting a lot of tailwinds from search and social advertising as they've had to battle a lot of the privacy regulations that have occurred. So you're seeing dollars flow from search and social into retail media. In addition to that, a lot of these retailers are just developing their capabilities right now. So you're still seeing retailers like Best Buy, waiting until 2021, 2022 to really grow out their capabilities. And then finally, what we're seeing, I guess, holistically is still spend moving over to digital from traditional. I think it's one of the big reasons why, if you look at a lot of the things that we've invested in at Progress Ventures, we haven't seen too big of a pullback in advertising budgets right now. I think a main reason for that is a lot of these traditional advertising dollars are still making their way over to digital. In addition to what we had mentioned before, these dollars are coming from a few different areas. One of the large areas that Sam has touched on is things coming down from trade spend. So this is the money that brands are spending to promote their products at retail locations. So a lot of things like volume pricing, slotting fees, these are also making their way into the retail media networks. So instead of having to spend on trade, a brand can buy retail media ads, which it kind of gives them a lot of the same benefits that you'd get from in-store. Like I mentioned earlier, banner ads give a lot of the upper funnel awareness. But in addition to that, you're able to couple that with a lot of the measurement and ROI and really harness a lot of the data assets that come along with using a retail media network. So it's this large green section on this slide that we're closely monitoring. I think it's slightly overlooked to a lot of the new dollars, net new dollars that are coming into retail media. But it's really propelling a lot of the growth that's going to be happening over the next few years. This is just a quick map. Like everything else in the advertising ecosystem, it is complex and there are a lot of intermediaries. One of the areas that we've looked at pretty closely is demand facilitation. So arming a lot of those brands and sellers with the tools that they need to navigate all of these different retail media networks, whether it be putting spend to Target, into Uber, into Amazon, Walmart, any of those different retailers out there. We've also looked into a lot of the, what we define as more platform facilitation or more of the supply side tech out there. Things like Kevel, things like Autogen, who are helping these retailers not only build the retail network themselves, but facilitate a lot of the ad dollars that are coming through. And again, protect and manage a lot of that first party data that's becoming more and more important as these regulations come over, mainly from Europe, but you're starting to see them statewide. A lot of legislation that's popping up in the US. Very adjacent to a lot of retail media is what publishers are doing. So one of the things we've seen a lot of publishers do is build in commerce technology into their stack. It sits very adjacent to a lot of these retail media networks. You're seeing a lot of partnerships be made between these publishers and the networks themselves. So that brings into play a lot of the traditional pub tech companies out there. And then sitting right under it is another area that's attracted, I think, a lot of venture funding recently. Is a lot of the influencer and social tools that go into managing a lot of the influencer marketing campaigns out there. Those sit right next to these social platforms, which brings in a lot of components of social commerce. So it's really around this message of the intersection of the marketing, media, advertising ecosystems coming together with commerce.
I'm going to jump in and talk a little bit about the landscape, and then also Tom Eaton put in an interesting question in the Q&A that we can kind of loop into this portion of the presentation, and I think we could get to it a little bit further on as well. But high level here, you've got the larger players in the market. I mean, Amazon in particular, where it was all in-house. Now they've supported a large ecosystem around them to manage for sellers the ability to manage their purchasing, manage their margins, manage their pricing strategy, and then partners starting in and building out on the DSP or the SSP side, or remaining just a partner for some of the smaller players. It's a mix, right? But we're seeing that the large tend to either acquire or build on their own, and then the smaller players are really leveraging the technologies existing in the market. To your question, Tom, I think that there are a good number of the partners out there that allow for some ability to move beyond the walled gardens. I think the retailers themselves are very focused on the data and the value that it exists there for the brands in ways that you couldn't really with physical retail in the past. It was just a mess. And so a lot of the trade spend was being used in kind to deliver any number of different in-store experiences without much real knowledge of how much impact any of that spend had. And that spend well eclipsed most of the digital app or any sort of advertising spend outside of shopper marketing or retail. So I think to your sustainability question, there are some elements that are more sustainable, unless at least that there's a value exchange between the retailer and the brands. Also, the brands are taking a lot of that budget, again, not from advertising pockets, but more from the shopper marketing and trade pockets, which are quite enormous. And then looping back a lot of the data around the sales. And I think that the retailers, that the Amazons, the Walmarts, Targets, Krogers, and others that truly understand the value of that data for the brands will be able to maintain a sustainable walled garden. And if they're able to bring that data back out. I mean, I think it is there. I think it is happening. But I think for true sustainability, there needs to be that continued value exchange to justify the spend, or I think the brands will be pinched. I think we can move on. There we go. Great. So this goes back to a point made earlier in the slide, or earlier in the presentation, where we're talking about the percentage of CPGs that partner with retail media networks and ultimately Amazon's dominance. A lot of the dominance depends on the strength of that consumer relationship, as we've seen, and Amazon certainly has won on that. I mean, building out the Prime program, building one of the largest retail membership networks out there, has allowed them to maintain a relationship with brands that others just haven't benefited from. And it being a step further, really understanding everyone's habits. I mean, going as deep as what they're watching on their televisions, what they're ordering on their shopping, as well as what they're buying. So grocery versus also just general retail. So I think that's where you see not only early entrant, but just a very different position of the retailer, that being Amazon, vis-a-vis the consumer. And I think each of the other players beneath are starting to change how they think about their audiences and what they bring both to the brands and what they bring back to their consumers. So interestingly enough, and this wasn't, we're seeing a lot of technology come out as we look at new potential investments and other ways that the retail networks are innovating. The strongest performance is really coming out of the on-site search ads and the on-site display and banners. It's the lowest cost option. It's not as engaging perhaps as videos, both on-site or off-site, but it's also not as intrusive, right? It's there, it performs, and it's also where most of the advertisers has focused their spend. I think it's also predominance of really what Amazon has to offer, but that's where we're seeing most of the activity. So getting back into the concept of scale and quality and capability, these are key factors that we see other retailers having to really focus on as they build up their retail media networks. What can they do to increase traffic? What is their strategy in really managing and leveraging first-party data, both for insights and future tactics? And then the experience itself. How are you enabling, be it on your own technologies and own platform, or using third parties, similar to what Amazon has done, to build a better experience for the brand advertisers and a better tool set to manage the spend on those sites? And then getting back down to targeting and measurement all sort of come into play when you have the first three in place. It's the scale, it's the quality, and it's the capabilities that each of these players will need to bring into market. So, search format, we've noted, really works. And if you look at the history, it used to be that everyone went direct to Amazon. They launched their whole marketing services group. Then they started a whole ecosystem of players around that and technologies. So even getting into phase 3 pretty quickly with Amazon. Agencies and service providers were actually a bulk of the growth in the market over the part of the last 6 years, and we're seeing more and more go to third-party technology platforms. Inevitably, there will be brands who want to work with agencies and service providers, and there are technologies, third-party platforms that are enabling the agencies. In the map that Brett showed earlier, there are certain technologies that are built specifically for the agency and service partners. But as the actual networks continue to scale, it's going to be on the third-party platforms to be able to not just work with one, but work with multiple networks. And then I think you'll see a consolidation and a control of capital through the third-party platforms that makes them attractive. It's what we've seen with some of the early investments we've made in the market, and we expect others to follow, where you will see a single platform managing across multiple walled gardens.
So one of the things that's fairly unique to Amazon is its seller universe. 20 plus years ago, they came up with the decision that they really want to open up their entire marketplace to the individual sellers out there. And what this has helped Amazon build is a really economical marketplace. It offers a lot of different product selection, low prices. They're able to take advantage of Amazon's delivery, warehousing. And this has led to third-party sellers now generating about 60% of Amazon's total retail sales. Amazon has, continued to lean into this, especially over the past year, as they've looked into what's really driving their own profitability. They came out with an announcement earlier this year to scale back their private label business, kind of seemingly under-monetized versus other areas of their own business. And I think that that's only going to continue to open the doors for sellers, and sellers are going to be major drivers of the retail media ad spends that flow through Amazon. So if we just look at some of the stats right now, there's over 6 million sellers globally on Amazon. Many of these are profitable, and that really is driving a lot of the total sellers. So if you look at first-party sellers, which are your big brands that are just using Amazon as a channel, versus the third-party sellers, these are people that are, bringing together in a warehouse things like toothpaste, basketballs, selling them through Amazon. That's really where the economics are in Amazon's favor, and we see as a continued growth opportunity in retail media. If we look at, how these sellers are going to make their way into other marketplaces, right now they're fairly confined to Amazon. A big reason is because Amazon has been built on that backbone for over 20 years. But retail media we see as an avenue that could potentially open the door for a lot of these sellers into other marketplaces. I think it's going to be beneficial for a lot of these retailers as it really doesn't provide any inventory risk. It's much more economical. This helps retailers not have to store and import a lot of the inventory. But right now, these capabilities for sellers to enter different types of marketplaces don't exactly exist. eBay is a big one where sellers are going right now to sell goods, and eBay does have a retail media network built out. But some of these new entrants, I think, are where we are eyeing a lot of the dollars that are going to be flowing, not only this year, but in the coming years, going to places like Shopify and more namely Walmart. So Walmart itself, though they're generating more than Amazon, they have a relatively small e-commerce footprint, so that there's just not a lot of scale that Walmart has to date. They took a move a little over a year ago into moving, I think, more towards the seller-centric universe. They announced a partnership with their first commerce platform out there, which was Shopify. And if you're looking at the numbers of independent sellers on Shopify, there's close to 2 million businesses being built on the Shopify backbone right now. This is going to allow them to get into Walmart's universe. So Walmart currently dwarfs Amazon, who's shipping products through their online sites. It's really just the big brands right now. This will help open it up to a lot of the seller universe, and I think it's going to drive a lot of additional growth in addition to traditional brand spend, bringing in dollars from sellers moving forward.
So I'm actually going to jump in. Thank you, Brett. I'm going to jump in, and I typed in one answer to a question that was another good one, and we've got even another here from Mark Rose, but I can maybe address some of that in where the retail media world is going. But I mentioned this earlier. I think it drives success for retail. It allows more flexibility in margin, as I had said before. Operating margins are for Amazon's retail media network are roughly 80%. You're driving purchase intent, and you're increasing product discovery. These are all things that not only on site but can be opened up to Google, opened up to other areas. And to your question, Mark, I think there is a revenue opportunity for reviews and ratings of products as they come in, as they increase, different updates that could come from the retailers to then encourage advertisers to spend on to promote that success or promote the interest from the market. A good review is something that you may want to share, or maybe want to be a good reason to drive awareness for that product. But when you start thinking about the market and how do you compete with Amazon, that's where I think you have to look at larger networks pulling together multiple retailers. Is there a way for whether or not they merge, like a Kroger and Albertsons? Can there be platforms, and we've seen one out of France called Octopia, where you're actually aggregating multiple retailers online into a single network? Could companies like Index Exchange or Criteo start to bring together what is a private marketplace for multiple retailers as opposed to a single retailer? And I don't think that's played out yet. I think it's still early days, and one where we'll see, I think, a decent amount of that to make sure that there's some price competition and also some reach, because a smaller retailer can struggle if they don't have that reach. Sorry, so we can keep on going. Maybe it's me. I'm still seeing slide 34.
Oh, I don't know why. Did this go forward?
No, still on 34. Sorry, all.
Yep.
It's showing 35 on mine.
All right. For some reason, I'm not seeing it.
I'm seeing slide 34.
Yeah, I'm just seeing slide 34.
Let me just bring it down and put it back up.
Great. Thanks, guys.
you seeing it right now?
Seeing 34.
Seeing slide 34. There we go. 35.
Okay.
And this gets a little bit back to the question that was just posed in and around scale by Mark Rose, right? It's going to be hard for later entrants, and these are all the pieces that start to challenge any new entrant, right? Scale, as questioned, that a tech play, is it the same experience? Do you have everything that you can get from insights and from measurement of ROI and all things that come out of Amazon? I think that do you have enough products? Are you bringing in shopper engagement? Are you too specialized? Are you too narrow? So all these pieces feed into the challenges, I think, facing the likes of those noted here, Instacart, Walmart, and eBay, but many of the others, some already talked about, like Kroger and Albertsons, and many other major retailers that just don't have the scale that Amazon does. So, these are things that we're looking at as we look out at other technologies that are in the market that are looking to bring their technology not just to Amazon, but to other players, and where they may be able to scale on a B2B basis, helping these other platforms grow. I think consumers want choice. We believe that. I think there is some Amazon fatigue in the market. And I think we're also seeing a decent amount of post-COVID interest to get out and actually be in the shopping experience and not just in front of a screen. But I think that's somewhat anecdotal and minimal compared to the movement that we're seeing online. So I think the key thing is we've got to find the technologies and the companies and those that are able to enable a broader adoption of the retail media offering. And John, you've got a long question here that between the slides, we may have to wait until we get to the end of the presentation. We can talk more about this because this is a bigger issue. The use of network providers. So this gets into who are the technologies, who are the partnerships that can be played out. And this is something we've started to look into. And I'd say we're probably in our earliest phases in around our own investment thesis. But major retailers to small retailers and local retailers all should be able to benefit from the retail media opportunity. And the question is, who are the network providers to really step up to do that? Some of the names I mentioned already, and we cover it again on a upcoming slide. But I think that the physical retail has constant struggle to have better presence online. And so whether it's Shopify and what they've done or other players that are hybrid, really enabling the connection both in store and online, allowing the ability to bring in marketplace sellers so that as a small retailer, you're not just selling your own goods, but you're selling the goods of others because of the audience that you attract. And what are the other, what technology connections are you enabling? How strong is your technology network and technology partnerships? All things that will create a better experience, somewhat touching on a prior slide here. And the in-store experience, I think that's going to be a haves and have-nots. I mean, some of the expenses that go into driving a stronger digital experience in store are just going to be beyond smaller players. But I think we will see more out there and certainly see the bleeding edge with the likes of Amazon and Apple and their self-checkouts. There have been issues that have been cropping up because of those. So some stores have cut them out completely. Others are trying to push it forward again. I think we'll see a pendulum swing back and forth on how in-store is truly digitized. But the key is coordination and making sure that your experience that you're delivering as a retailer mirrors between the online and the in-store experience, so that the customer feels like they're truly dealing with the same entity, no matter what the touch point.
So in addition to the network providers, how can the advertisers and publishers out there, keep up with these changes as well? For the advertisers, we look to a few different things. They should be looking to work with multiple retail media networks, kind of spanning their spend across not only Amazon, but taking advantage of new opportunities that could occur in a place like Best Buy or Walmart or any of the other media networks that are now popping up, and really holistically look at the big picture of your spend across these media networks. I think one of the key pieces is around measurement and attribution analytics. A lot of third-party technology out there can help you do that and take a lot of these new business insights that you're getting from this first-party data. It's going to become more and more valuable as these privacy regulations that we keep talking about take place. On the publisher side, one of the things that we see a lot of publishers looking to do is to build commerce technologies into their stack. People are looking to link their transactions to the actual advertisements themselves. This helps trace that back and close that transaction loop that we talked about earlier today. Continue to engage with the lower funnel. That's the whole reason these media networks exist. It's high intent shopping, very close to the point of sale. And the more you're able to do around creative, I think will help you there. We're seeing a lot of dynamic creative optimization tools get a lot of traction in the market right now. And then finally, partner with retail media networks. Look to create partnerships, take advantage of that unique data you have. If you have niche audiences, they could probably be connected to some of the unique offerings from these retail media networks. And then just to kind of wrap up here in privacy regulations, what this is going to do, and as you see a lot of the ad dollars that are flowing from search and social come over to retail media, there's going to be a degree of repricing in the market, but it's going to be having that holistic view across all the channels that you're doing. Having a good omni-channel perspective on a lot of your ad spend is going to be very important. There's major regulations taking place, such as what's happening in California with CPRA, which is kind of an extension of CCPA, and seeing a lot of the privacy regulations and standards that were set forth in Europe now make their way over to the US. Apple obviously had their regulations that were rolled out last year. These have already cost Meta billions of dollars, and we're going to continue to do so. So these ad dollars are going to make their ways to other places. I think retail media is going to be a huge benefactor of this. And it's going to continue to kind of shape the way that a lot of these brands and agencies out there are going to be remodeling a lot of their traditional strategies and looking for ways to optimize and have the data to back up a lot of the new ways that they're going to be spending.
So as we've hit on it a couple of times, and just in closing, want to hit on these last points. But we see digital advertising. Could it double in scale because of retail media? If you look at the scale again of what trade and co-op spend has been historically, eclipsing advertising spend, then yes, we could see a digital advertising growth of doubling if we include retail media in that. It's massive. And so while it's, in 21, only 16% of digital ad spend, we see that as only getting larger and larger as more retailers spend to get closer to the consumer, as Brett was touching on earlier in the deck. They're effective. They're at the right point of the purchase funnel, and I think allow, again, the data and the feedback and the measurement around return on ad spend and return on investment to be measured and then acted upon to optimize campaigns and spend more with the retailers. The retailers want to continue to support it because then they'll be able to get better margins. They'll be able to get more products and scale efficiently. Amazon is still the major leader here. There's no question about it. But we are interested and there to help a lot of the emerging technologies bring this out to a broader set of the market. And we'll certainly keep you all posted as we invest into the space and bank the space and see more transactions take place that bring retail media to a broader audience and a broader set of retailers. Sorry, just go back one. And so the analytics side, sorry, back one more still. Just, so analytics are still developing. I would say we're starting to see some interesting platforms in the market, and I'd say there are a few leaders. I mean, there are companies that we're tracking, but I'd say it's nowhere near the depth of data and analytics that we see in broader shopper marketing and or even online advertising. So we see this as something that's going to be picked up both by agency and by technology platforms. But the third-party technologies are going to be crucial. Going on to the next slide, this talks about the areas that we're interested in and where we believe there continues to be opportunity. You'll see here we did make an investment into Teikametrics and ID5. Those are highlighted, but data, identity, measurement, analytics, anything around automation, right? The application of AI and ML into this landscape and processing large amounts of data and understanding and how to drive performance, getting into that optimization, both for the sellers and for the brands that are working with those sellers or the brands that are working directly onto those platforms, as well as those who are building out the networks, the likes of the Kevels, the Criteos, Index Exchange, and Octopia, others out there that are really helping to stand up other networks and bring in the collective power or critical mass to be something competitive with the likes of Amazon. And just as we're wrapping here and addressing another question Mark Rose brought in about one category or the other. I mean, you think about an interesting piece is that Amazon is filled up with sellers, some of which are just selling tennis balls. And they're the best tennis ball seller on Amazon. And there are technologies that they're using, or they're part of a seller network, be it part of any of the seller aggregators, but they are experts in that specific area. So I think it's a mix. I think it's those who optimize and use the technologies that they can to sell in. It's all about the network, I would say, and the technologies that surround an individual seller or a larger retailer. So I don't think there is one area or the other that is better positioned for success. I think it's a matter of which tech is being used and how these sellers are optimizing the experience for retailers and for consumers. I think that's the last slide, but I could be wrong.
Yeah.
There we are. Good questions coming into the chat. Yeah, thank you all. And happy to take any other questions if there are any right now. But really appreciate everyone's time and thank you for sharing it with us.
Yeah, thank you, Sam. Thank you, Brett. We still have time for questions. You can raise your hand and we can switch over to you, or if you want to type it in, you're more than welcome to in the Q&A or the chat channel, and we'll take them here. While we're waiting for some questions, Sam, Brett, we've talked about this a little bit internally, but the consumer adoption, like with all these ads proliferating on all of these different websites that I'm visiting, whether it be Walmart, whether it be Yelp, whether it be Seamless Web or Amazon and the like, I'm getting bombarded with ads and my organic searches are going further down the page. Do consumers care?
I haven't noticed that people care. I actually think that retail media advertising is very contextually relevant. I mean, to people like us who are on the lookout for this stuff, I think it can become a bit of a little bit of a hindrance to us. But I think for the average consumer, like I talked to a lot of my friends out there, they actually like what they've gotten from product recommendations and doing a lot of shopping on places like Amazon and other retailers. So I actually think it's fairly beneficial. I think it's a good alternative to being bombarded on a lot of the traditional publishers that you're seeing if you're reading the news or even on social sites. So I think it's a new way that hasn't gotten too intrusive right now, and I think that that's driven a lot of the success. And yeah, I think it's net good.
So maybe the question is not so much as do they care or do they notice? Maybe the answer is not so much. So Kevin Tan has written a question in, where do you see gaps in the market? What opportunities are not being fully met by the technology service providers, and which areas have not yet invested in the space that maybe there are opportunities for?
I'll answer that, and thanks for your question, Kevin. I believe it's the technologies that really help to build out it's the retail or the network providers. How are more retailers getting online and building up something that can be an alternative to Amazon? I think there will be other technologies that go in play, in line with that, even the likes of some of the investments we made already. But I do believe that there needs to be more partners.
So one of our participants, M398, what if anything can Amazon do, or are they doing to defend their position? Clearly, they're not going to go. They're not going to go quietly, or they're not going to give up share quietly.
No, I mean, my and Brett, you answered this as well. My impression of that is really around increasing the number of sellers on the platform. The more sellers you bring in, the more products you have, the more people you then bring to the site from a consumer standpoint. So I think they're doing everything they can to remain the most definitive source for just about anything that you want to buy.
Yeah. And if you look at a lot of the media investments they've made, recently into content, spending billions of dollars on things like Thursday Night Football, also growing out there. I think there was an announcement pretty recently about how much they're committing to true content spend for things like movies and TV shows. Being able to offer hyper relevant CTV ads pipe through not only their software through Prime Video, but also through a lot of the hardware that they're building too. I think that connects a lot of this loop that we're seeing for bringing consistent messaging, not only on what you're getting in search results if you're looking on your phone, but also kind of seeing that pop up on a lot of the media properties that they own as well. So they're able to offer very relevant advertising in a lot of different forms.
So Key has raised his hand. Can we go to Key, or he's typed it in the chat?
Yeah, he's allowed
There he is.
to talk right now.
Go ahead, Key.
Hi, I was just asking with regard to your views or thoughts inside of email and CRM and texting and a lot of the technologies that have been out there for quite a number of years, but are being disrupted with regard to privacy and the change it with the tracking cookies and the like. And curious to hear your views on that side of the investment opportunity.
So Key, I guess there you get platforms like Attentive or Braze or Wonderkind or others that are out there, and Airship, where I would say so a large part of the Amazon revenue drivers are the sellers, right? It's the seller aggregators, the Thrasios, et cetera, that bring the sellers in. And then even the brands that emerge and become larger independents, and they themselves are starting to look beyond Amazon as a marketplace. So looking at other marketplaces, they're also then thinking about, well, what about my own e-commerce presence? Do I rely solely on Amazon or solely on these marketplaces, or do I create my own e-commerce destination? And then once you do that, how are you truly engaging with your best customers? How are you taking any of the data from where you're making sales and turning that into increased engagement and better margin sales, not just on the marketplaces, but in a direct relationship with the consumer. So there's some very large, unicorn businesses in the market in and around email, text, and otherwise, names I've mentioned, that I think are starting to see pickup from a whole new host of customers that are driven by these marketplaces, e-commerce sellers, individual brands, DTC brands that have, all done their sort of fulfilled by Amazon in the past, that are realizing they've got something much bigger and bridging into those platforms. I'd say that's not necessarily the focus of some of those large, technology companies and marketing platforms, but I think it's an increasing opportunity just given the shift to e-commerce overall. I would, a lot of those are fairly mature at this point. We've not made any investments into sort of the marketing automation and these marketing channel platforms. We are seeing some that are focusing on some technologies that are focusing on attribution. So while it may not be the actual technology provider to push marketing automation, it may be, as a marketer using these technologies, which ones are really performing for me. And I think as digital, physical, all this hybrid is blending further and further, and needing to understand both physical, real world channels and how they compare to digital channels. Attribution is an area that is in need of a reset, as a lot of the first generation attribution was focused just on digital. I'd say that's an area that we've been looking at.
Thanks, Keith. We have a question from Alex Gardner on to what extent do we think that the retail media networks are dependent on the cookie to leverage their data, particularly on third-party properties? And do we think that's a risk to the growth of the channel?
I'll say yes. As far as the final point or final question, I think third-party cookies will slowly find their way out, enabling any sort of offsite advertising or greater reach for these retail for the brands, and how these the networks themselves can enable reach offsite. Third party is the easiest way to do it right now. With that going away, I think you have to start looking at some of the other universal IDs. Whoever that may be, right? And also better first party data management. As a retailer or a retail brand, what are you doing to increase your data lake and audience graph?
Thanks, Alex. Thanks, Sam. I think we have time for one more question coming in from AJ Bam. What role will user-generated content video play in this ecosystem, if any?
I'll say it's great to see you, AJ. Thanks for joining. We've actually been looking a lot. It's a little bit aside. Maybe Brett, you want to comment on this. We've been looking a lot into live shopping, social commerce as well. So we actually haven't seen a whole lot of crossover, but maybe you want to speak to that, Brett, as well.
Yeah, on the social commerce side, I mean, live streaming, we've seen a huge uptick in different areas of the globe. It really hasn't come to North America yet. But I mean, UGC can come in different forms. So we've seen a lot of, kind of relying on influencer networks to make very contextually relevant advertising. That entire landscape, I think, of the broader influencer marketing space is still developing. One of the interesting things that I think can come out of it is connecting brands with very niche and hyper-local audiences. So if you have an influencer out there who is very big into golf or very big into skiing, it can create a great access point for either a brand itself or even a retail media network to kind of channel advertising through that and make that connection. That's kind of where we see social commerce is a very tangentially related area of retail media.
Yeah, and I know we want to try and wrap because we're going to the top of the hour, but just one add to that, I would say, Jay, is that there's social proof messaging that has definitely been growing as an area to drive conversions in commerce. So, Pixely, Turn2, they just went through a transaction and got acquired. You have Curate as part of Bizarre Voice. But all of them have been touching on different areas of social media that they can pull into the retail experience. And I think you'll definitely see more of that, whether that's just user reviews, user videos in reviews, or ratings. There's definitely an interest to pull real life references in and not just product descriptions.
Thanks, Sam. Thanks, RJ, and everybody else who was asking questions and the engagement. This brings us to the top of the hour. Thank you for joining us. We're thrilled to be able to walk through